Deposit a paycheck into a standard checking account, and something curious happens. Over the next 30 days, small amounts of that money will quietly disappear. Historically, the business of banking was incredibly straightforward. An institution would hold customer deposits in a secure vault and then lend those funds out to other people, charging interest to generate a profit. The modern reality looks quite different. Today, major brick-and-mortar institutions actively monetize minor customer mistakes and charge you a premium simply for basic account maintenance. Banks deliberately engineer these extractions using regulatory loopholes, transforming routine customer activity into high-margin profit engines. Participating in modern banking now requires paying a series of systemic tolls designed to siphon off wealth as you move through your financial life. The first major leak is essentially a forced subscription to access your own cash. At many major institutions, if you don't maintain a specific minimum balance, you are hit with a monthly maintenance fee. This can cost you up to $25 a month just for the privilege of keeping an account open. That extraction continues when you try to use physical cash. If you make a withdrawal at an ATM outside of your bank's designated network, you get hit with a surcharge from the machine's operator, plus another fee from your own bank. This charge shows the aggressive upward trajectory of average out-of-network ATM fees. Starting from a baseline of $1.97 back in 1998, the cost of a single transaction has climbed over 150%, hitting an average of $4.86 today. If your checking account pays you a fraction of a percent in interest, paying almost $5 to access your own earnings completely wipes out any minor gains you might have accumulated over the entire year. The second leak occurs during an everyday transaction, like buying groceries. If your account is short by even $1, you trigger an overdraft penalty. Instead of simply declining your debit card at the register because of insufficient funds, the bank silently approves the purchase. Then they apply a massive penalty for covering the difference, frequently charging around $35 for a single incident. The legal framework for this mechanism dates back to a 1969 exemption in the Truth in Lending Act. Regulators allowed banks to classify these overdraft penalties as courtesy services. Because they aren't legally classified as loans, they bypass standard consumer lending protections. This specific exemption created a system that penalizes working-class individuals for a temporary lack of liquidity. A brief shortfall in cash is transformed into a highly lucrative corporate revenue stream. The third leak shifts from the money you have to the money you borrow: credit card late fees. In 2009, Congress attempted to rein in these penalties by passing the Card Act, which explicitly banned excessive penalty fees and deceptive bait-and-switch tactics. However, a 2010 immunity provision created a massive loophole. It allowed credit card companies to automatically adjust their late fees for inflation every single year. Because of this built-in escalator, maximum penalties rapidly ballooned to over $30. Card giants used the excuse of inflation to legally increase their penalties, steadily driving up prices even as modern, automated digital processing made debt collection significantly cheaper. When you aggregate all of these minor personal penalties, you start to see the true scale of the extraction across the broader economy. In 2023, banks generated over $6 billion from overdrafts and an additional $14 billion from credit card late fees. Bringing this down to a single individual level, the math remains punishing. One out-of-network ATM visit per week compounds to over $250 a year in personal losses. The industry harvests these billions from consumers who view the leaks as an inevitable cost of living, deriving profit from systemic penalties rather than genuine financial innovation. You are not permanently trapped in this ecosystem, and recently, regulatory bodies have finally begun to step in. The Consumer Financial Protection Bureau recently issued new regulations to aggressively close these loopholes, implementing rules that legally cap credit card late fees at $8 and limit standard overdraft fees to just $5. But you can take immediate action today. If you see a maintenance or overdraft charge on your account, pick up the phone and ask the bank to waive it. Because so few customers actually push back, this simple tactic has a remarkably high historical success rate. The ultimate long-term solution is to treat traditional brick-and-mortar banks like a bus station. Your goal is to route your money in and then get your cash out as fast as possible, transferring your savings into high-yield, fee-free online institutions. Plugging these financial leaks doesn't require a drastic lifestyle change or extreme frugality. It requires a single, focused audit of your accounts to permanently stop the drain, ensuring your wealth stays exactly where it belongs, in your hands. Subscribe to uncover the money you didn't know you were losing.